Oil just fell off a cliff. Gold and silver got crushed. And one political decision may have flipped the entire commodities market almost overnight. Um, Most investors still do not understand why. Let me set the scene. Just days ago, traders were bracing for chaos in the Middle East. Inflation fears were rising. Gold was at record highs. Oil was holding strong on war risk. Then everything changed. Oil dropped more than 3%. Gold and silver went into freefall, and the US dollar suddenly surged. Now, here is the key part. None of this was random. This was a macro shock. Politics, central banking, risk sentiment, all hitting the market at the same time. And once you see the connection, the moves make sense. Let us start with oil. This move caught traders off guard. Oil did not fall because demand disappeared. It fell because fear disappeared, at least for now. Over the weekend, the US president sounded optimistic about a deal with Iran. That single comment flipped oil's biggest short term driver, geopolitical risk. Just weeks ago, markets were pricing in military escalation, warships, threats, regional conflict. This surprised traders because oil had been carrying war insurance in its price. The moment diplomacy looked possible, that insurance vanished. WTI slid toward the low $60 range. Brent followed right behind. And remember this, oil markets do not wait for outcomes. They move on expectations. Once traders believed supply disruptions might not happen, selling accelerated. But oil did not fall alone. And this is where things get interesting. At the same time, the US dollar surged. Why did this happen? Because the White House named Kevin Warsh as the next Federal Reserve chair. Most investors are missing this. But personnel is policy. Warsh is seen as a tough inflation fighter. The translation, higher interest rates for longer are back on the table. That instantly flipped the dollar narrative. After getting hit last week, the dollar snapped higher across the board. And when the dollar rises, commodities feel it immediately. Now let us talk about precious metals, because this move shocked even experienced traders. Gold did not dip, it collapsed. Silver did not pull back, it cratered. Gold fell double digits at one point. Silver saw one of its sharpest drops in years. What happened? Three things hit at once. First, a stronger dollar made gold and silver more expensive globally. Second, higher rate expectations hurt non-yielding assets. Third, easing Middle East tensions reduced safe haven demand. Now here is the key part. Gold and silver had become crowded trades. Once momentum broke, stops were triggered. Leverage unwound. Forced selling kicked in. For selling kicked in, that is how you go from record highs to panic selling in just days. And this was not just about commodities. Equity markets across Asia followed Wall Street lower. Tech-heavy markets took the biggest hit. Investors are now asking a tough question. When do massive AI investments actually pay off? Defensive assets did not protect the way people expected. Volatility is back. This is not a crash. It is a repricing, and it is happening fast. So what does this mean for you, for oil investors? Short-term pressure remains if diplomacy headlines continue, but do not confuse easing tension with long-term stability. APEC, supply discipline, future disruptions, they still matter for gold and silver holders. This was a reset, not the end of the story. Direction now depends on the dollar and on Federal Reserve expectations. Volatility is not going away for traders. Now, macro forces are back in control. Politics, central banks, currencies. They matter more than individual data points. And most importantly, complacency is gone. Looking ahead, watch these closely. US and Iran negotiations. signals from the Federal Reserve, whether the dollar stays strong, and whether global risk pushes investors back to safe havens. If tensions flare up again, oil and gold could rebound fast. If the dollar keeps climbing, commodities may stay under pressure. This market is no longer slow or predictable. It is headline driven and emotional. So let me ask you this. Is this sell off a buying opportunity or the start of a deeper correction? Drop your view in the comments. And if you want more breakdowns like this, where geopolitics meets real market moves, make sure you are subscribed.